Good morning, hello and welcome to Moneycontrol's live stream. You're tuned into a fresh new edition of Opening Bell with me, Lovisha Darad. Well, it looks like a muted start for our markets given the trends in the GIFT Nifty speak so, and even the pre-open rates are pointing for a very negative start for the Indian markets. And it's the bond bazooka which will play a spoil sport today because yesterday overnight we saw that the US bond yields, the 10-year bond yields have reached the highest levels that were seen at the time when Trump had announced its tariff measures. And even the 30-year bond yields that have jumped above 5%, which was last seen in 1.5 years. So yes, the bond markets have spooked after the US President Donald Trump's budget bill, which he calls the big beautiful bill, that concerned investors that it would add another layer of fiscal deficit stress. Now, the estimates are that the bill is expected to add over $3 trillion of deficit stress in the next 10 years. And that's what prompted the yields to rise as well. And that's what concerned the investors going ahead. Now, the resultant impact that was visible in the equity markets. We saw that the US markets ended lower overnight. Dow tumbled about over 800 points, S&P 500 and NASDAQ. Those were also down by 1% each. And even Asia Pacific markets that started on a lower note. So the visible impact was felt across the global markets as well. So all in all, we started off with a not so good global screen. But coming back to home, we'll watch out if India turns around the corner because the start does look tepid at this point of time. We'll watch out for some important stocks. IndusInd Bank reacting to its worse than feared Q4 results. Indigo reporting good numbers, however. So all of these stocks will be watching out in today's trading session. Also keep posting your stock related queries and we'll take them up shortly as well. First up, let's quickly take a look at the top headlines this hour. Wall Street ended sharply lower with Dow ending 800 points lower. The S&P 500 and NASDAQ also saw a sharp cut as Treasury yields jumped. President Trump's tax bill and earnings from retailers weigh on the sentiment. Stocks in the Asia Pacific also opened lower, mirroring Wall Street moves. Meanwhile, the GIFT Nifty is indicating a weak start for our Indian markets. Oil prices ease as Oman foreign minister said that fresh nuclear talks between Iran and US will take place later this week. Meanwhile, a weaker dollar and geopolitical uncertainty push gold to one-week high. IndusInd Bank reports net loss of over 2,300 crore rupees, a first in 20 years as accounting issues and MFI issues weigh. The management hopes to start FY26 on a clean slate without carrying any of the past issues. And in key earnings, watch out for ITC, Sun Pharma and Grasim, which will be scheduled to report their March quarter performance later today. All right, as I was talking about, yesterday we did see a good for markets because Nifty did snap that 3-day losing streak and reclaim that 24,800 mark. Sensex even crossed that 81,600. So a broad-based buying was seen across the sectors. Even the mid-cap and small-cap indices, both of them bounced back in yesterday's trading session. And defense stocks, which had been seeing profit booking, saw some revival in yesterday's trading session. But we'll watch out for if today it sustains because we are starting off with a very tepid global screen, and the bond yields could play a spoil sport in today's market as well, and the spillover could be visible in Indian markets as well. But in key earnings, like I was talking about, we'll watch out for some key results. ITC, Grasim, Sun Pharma, GMR Airports, all of them are scheduled to report their Q4 results today. But some of the cues that we will be watching out and which will set up the tone of the trade today, which is your fund flows data. Yesterday, we saw that the FIs have bought stocks which was worth about 2,200 crore rupees in the cash markets. DIIs also bought in stocks which was worth about 684 crore rupees in the cash markets. Option cues data, Nifty put call ratio rising to 0.81 levels from 0.69 levels, so some optimism holding on to there. And in the F&O ban list, Titagarh Rail, just a day after it exited the F&O ban list, it's back again in the F&O ban. So yes, it is the one new stock which is added, which is your Titagarh Rail. The stock that continue to be a part of it, that is your Manappuram Finance and RBL Bank. Now, just a couple of minutes before we head to the open, roughly 5 minutes or so. But yes, in the pre-open rates, like we are looking at, Sensex is down about 200 points and Nifty is also below that that 24,750 mark. So yes, all in all, a very muted start, and that's what we are hoping to see. That's where we are expected to see. But with that, let's quickly get on board with our technical expert of the show. Joining me, Chandan Taparia of Motilal Oswal. Chandan, we did say that yesterday Nifty reclaimed that 24,800. But do you expect this to sustain? Because today we are starting off with quite a tepid global screen.
Good morning. Thanks for having me. So yes, the market is struggling to move beyond 25,000 marks from last 4-5 trading session. And as it is finding some sustained supply, index started to form lower highs from last 3-4 trading session. However, on the last trading session, it formed an inside bar, managed to hold 24,700, managed to close about 24,800. But again, the global sentiments are tepid, and because of that, we might open negative. But as of now, the 24,550 could act as a major support. We believe that buy on decline resistance could continue till it holds above 24,444 or 24,550 marks. I believe the broader trading range will be there between 24,444 to 25,200 level. And being the weekly expiry, some sort of swings cannot be ruled out in the market. But the major weekly trend is positive, so we'll go with buy on decline resistance in the market.
Okay, buy on decline is the market. But let's take one stock in focus. That was your IndusInd Bank, because that reported a very weak set of numbers yesterday. We saw that the consolidated net loss was at 2329 crore rupees in the fourth quarter, and NII was down about 43% year on year. Even the NIMs contracted by 201 basis points, which was quite high. And if you look at the corporate book, that declined by about 15% Q on Q. So the management, despite saying that it'll be a forgetful quarter, they plan to start FY26 on a clean slate, but to rebuild that entire corporate book is something that we need to watch out for. Other income, that was lowest in 31 quarters on a sequential basis. Slippages rose very sharply to about 5,014 crore rupees from 2,200 crore rupees from a quarter back. Annualized slippage ratio, that was highest in 16 quarters. Gross NPA ratio, highest in 10 years. And net NPA ratio, which was highest in 21 quarters. And the bank did use the entire contingent provision of about 1325 crore rupees in the fourth quarter itself. Chandan, what do you expect for IndusInd Bank? How much of a downside can we see and can we expect today? And of course, apart from IndusInd Bank, do highlight the Bank Nifty levels too.
Yeah, so the structure of the IndusInd Bank is negative, as we witness sustained selling pressure at every meaningful bounce. Even on the weekly chart, it witnessed a recovery till 863 but failed to hold and again drifting lower. It is finding hurdle at its 50-day exponential moving average, and in fact from last 6 trading sessions, sustained supply is clearly visible near 790 marks. So I believe till it holds below 790, it can go down to a 750, 735 levels. Looking at the Bank Nifty index, it formed a doji sort of candle, has been consolidating in a range of 1,000 points in between 54,500 to 55,500 marks. So it requires a decisive breakout. Even on the last trading session, it formed a doji candle, which indicates the tug of war between bulls and bears. So I believe we have to play the range between 54,500 to 55,500. If it manages to move beyond 55,500, then only the fresh leg of rally. So as of now, the banking index is in a range of 1,000 points. ICICI Bank and HDFC Bank could do well, while IndusInd Bank could be under pressure.
Okay. Chandan, what about Nifty Pharma? Because that was one of the good sectors which performed yesterday, and we did see some good numbers which trickled in from Torrent Pharma and Aster DM as well. So should we expect a bullish trend to continue, or how does the chart indicate?
So Nifty Pharma Index has been moving in a range with multiple hurdle at 22,000 marks. If I talk about the Nifty Pharma Index level, we are again back to the level which was seen at the end of April 2025. So supports are there, but again, supply is clearly visible at higher zone. If you have to pick one name, then I think we need to focus on the counter like Glenmark Pharma, which has been finding sustained supply. But most of the pharma names are having the similar sort of price pattern. So looking at the Glenmark Pharma, I believe 1410 could act as support for a bounce towards 1500 marks. Some support-based buying could be there in the Sun Pharma, but it will be very clear that most of the pharma stocks are in range bound mode.
Okay, okay, all right. Apart from Nifty, Pharma, even the Nifty Realty has been doing quite well, Chandan, and even the last session was quite well for the Nifty Realty Index. Anything that you're finding good and attractive from the space?
Yeah, so Nifty real estate is in flavor because it has been making high tops, high bottom from last 8, 9 trading session. And there are two reasons behind it. First, the real estate housing policy in the Maharashtra, and second, there's the buzz of rate cut in the upcoming RBI policy, which is going to held in the beginning of the June. So two triggers are there, and because of that, most of the railway stocks are witnessing some buying interest. So DLF is on radar. However, we have seen descent run up from 620 to 780 marks, but it has been making high top, high bottom until it holds above 750. It can head towards 800 marks. So DLF will be on the top of the real estate counter. Looking at the Oberoi Realty has been witnessing consolidation breakout. Supports are intact. So with support of 1700, it can reclaim to 1780 to 1800 marks. So expecting positive stance in selective real estate counter, be it DLF, Oberoi, Loda, and I believe this space could be next.
Okay, okay. Chandan, what about the Nifty IT space? Because now that we are seeing some concerns over US economic slowdown, and even the new tax bill which is proposing that, we could see some, stress in the fiscal deficit going ahead. So do you expect that investors should remain on the sidelines at this point of time for the Nifty IT index?
So talking about Nifty IT, after the downgrade of the US rating, we witnessed some profit booking, but again, it has been holding well above its 50-day exponential moving average. We had seen a descent run up on the 12th May. Even after the corrective move, we are not breaking the support of 12th of May. So it has been consolidating. If I look at the daily price structure from last 8 days, so I believe selective IT counter can do well. Persistent system could be one name which might see some support based buying. 5550 is the support for an upside target towards 5900, while other name could be in range about more, whether we talk about TCS or Infosys.
Okay, okay. All right, our first trades coming on your screen. Let's see how the markets have opened. Well, yes, we have opened in the negative territory as we were expecting, below that 24,750 mark with about 0.3% cut that is coming in from the Nifty. Sensex is also down about like 350 points, below that 81,250 odd levels as well. So yes, not that good open for the markets at this point of time, because right now also the Nifty is down about 100 points or so. If you look at the mid-cap and small-cap end of the markets, both of them are exhibiting very negative trends, not participating as usual. Small caps, however, eking very small amount of gains, 0.2% compared to what the mid-caps have been indicating with about 0.2% cut. If you look at the India Wicks, that have jumped with about 1% gain. On the other hand, only Nifty Media Index is in the positive territory. Rest all of the sectors have plunged into the negative zone. If you look at Nifty Pharma Index, yesterday's top performer, that is also seeing a tepid trade today with a 0.5% cut. Nifty IT Index, like we were talking about, definitely with a larger cut of about 1% or so, one of the top sectoral underperformers for today's, in the opening rates. Other than that, Bank Nifty Index not doing well. Auto Index also seeing a cut of about 0.5% or so. So all in all, a very negative start for the markets, and the muted impact, the muted sentiment of the global markets is visible for our own markets as well. Let's take a look at some of the top gainers and losers on the Nifty. However, the top gainers continue to be your Adani Ports. Adani stocks are doing quite well. Adani Ports, Adani Enterprises with a gain of about 0.3 to 0.6%. Geo Financial topping the charts with about 1% gains or so. HDFC Life, NTPC seeing a gain of about 0.3, very small gains, but however they are in the top gainers list. On the other hand, IndusInd Bank, like we were talking about, top loser, 4% slide coming in for the counter, given that the brokerages have also remained very cautious. They have retained their hold. Some of them have given a reduced rating on the counter, have slashed the target prices and the FY26 estimates, given that the management did not give any guidance upon FY26. So they are quite uncertain of where the trajectory could lead to. Power Grid with about 1% cut, HCL Tech Mahindra with about 1% cut, Hero MotoCorp also not doing well with about 1% cut as well. But like we were talking about IndusInd Bank with about 4% cut, that is also one of the top Nifty 50 losers. But on the contrary, one stock let's take focus, that is your Indigo, because that did report a good set of results yesterday. The stock is, however, down with about 1% or so, but we did see that the net profit surged about 62% on a year-on-year basis, and revenue also rose about 24% on a year-on-year basis, led by domestic business. Chandan, how does the stock look like on the charts? Of course, today it's exhibiting a very downtrend, but if you look at from the May lows after the cross-border tensions eased, the stock did see a rally of about 7% or so.
Yeah, so looking at the Indigo, I believe the stock witnessed some profit booking decline from higher levels. However, the stability of the crude is the reason that keep the downside limited. But in last 4 days, we have seen a corrective move from 56.65 to 53.65, almost corrective move of 5 to 6%. But I believe the major support goes at 5200 marks. So let it correct more. Let it find the support near 5200 to get some recovery from lower zone.
Okay, all right. Let's take one more stock in focus. The company is scheduled to report its earnings today, which is your ITC. What the Moneycontrol poll estimates is that the revenue is expected to rise by about 5% on a year-on-year basis. However, the net profit is expected to see a degrowth by about 2.3% on a year-on-year basis. If you look at the stock performance this year, it's been quite negative. Chandan, what do you expect? Do you expect the trend to continue for the next near term at least?
So, looking at ITC, the good part is that the stock is low beta, and because of that, margin of safety is clearly visible. But from last 24 trading session, the stock has not done well. It has been consolidating, gone sideways. Multiple supports are seen at 420, hurdle at 440. So I believe 420 to 440 is going to be the trading range for the counter, and which is happening from last almost 5 weeks or 25 trading session.
Okay, all right. Let's take another stock in focus, which is your Colgate Palmolive, where we are seeing that the stock is not reacting well to its Q4 results. The stock is down about 4% or so. We did see that the profit saw a year-on-year decline of about 6.5% on a year-on-year basis, and even the revenue of the quarter was down about 2% on a year-on-year basis. EBITDA, that also declined by about 6.4%, and the margins were also saw a little bit of a contraction of about 34, and it stood at 34% from 35.7% a year earlier. Colgate, how does the stock look like on the counter, Chandan, for you?
So looking at Colgate Palmolive or Colpal, it witnessed profit booking decline. 2750 to 2550 already seen a corrective move. Even on the weekly chart, it got stuck in a range. So I believe let it find some more stability. As of now, it can see a corrective move towards 2500 to 2475.
Okay, 2475 is what we expect on Colgate as well. Now let's take some of the viewer queries that is dropping in our live feed. The first query coming in from Naveen is asking the view on Siemens and how does the stock look like on the charts from a near-term basis. If you look at from a month perspective, the stock has done well with about 14% uptick, despite what this YTD performance says, which is your 50% downtick. But from 1 year, the stock is trying to play a catch-up. What do you expect on the charts, Chandan? What does it indicate?
So Siemens looks good. It has been making higher tops, higher bottom. In fact, from last 10 to 11 days, it has been making higher highs, higher lows. Trend is intact. Even after the decline of around 200 points in Nifty today, the stock is holding firm, which clearly indicates the outperformance nature of the counter in the recent trend. So with support of 3210, I believe ongoing momentum could extend towards 3350 to 3400.
Okay, 3400 is what we can watch out for Siemens as well. Now let's take another viewer query. Well, Rupak is asking that he's invested in PI Industries a year ago and the price has not done much. He's at par currently, so he's asking whether he should stay invested or move out at this point of time. PI Industries, how does the stock look like? Because if you look at from the past 1 month itself, the stock hasn't really done much, and even 6 months perspective, the stock is exhibiting quite a negative trend. Even the Q4 results was quite moderate, so to speak. Chandan, what do you expect? Do you expect the consolidation to continue for the near term?
So it got stuck in a range from last almost 25 trading session with support at 3500 and hurdle at 3800. So I believe this probable trading range could continue. So momentum is clearly missing. So one has to play the broader trading range.
Okay, should he? He's asking whether he should stay invested or he should exit at this point of time. And what are the stocks?
So,
Any other stocks he's asking if he can suggest and invest in.
so if he is holding for short-term point of view, the suggestion will be better to exit. But if he can hold for long term, I think one can continue because overall the stock has a lower beta with margin of safety. So downside seems to be kept, but again momentum is missing. So that's why upside is momentum is not happening. So if someone is looking to hold for position, I think one can keep the counter.
Okay, all right. Let's take another viewer query. Siddharth is asking about ONGC and reaction to its results. Well, the stock is down about 0.7%, so to speak, and the company did report a profit down, which about 22% on a year-on-year basis. Revenue, however, was very modestly up by about 44%. EBITDA, operationally also, the company did not do well. If you look at ONGC as a counter from a 1 month perspective, the stock is also, not doing well at this point of time. And, it's stuck in a range from the past 6 months as well. What do you expect? How do you read the Q4 results and, of course, the stock performance, Chandan?
So looking at ONGC, the stock witnessed some recovery, but again the momentum is missing. It has multiple hurdle at 250 marks because of the coal writing activities. Even 2 days back, it managed to hit 252, but again fell to hold 250. So I believe 250 zone could provide as a hurdle, and because of this hurdle, it can see a corrective move towards 240.
Okay, 240 levels that we can expect. Let's take another viewer query at this point of time. Shikha Kapoor is asking the short-term view on Vari Energies. If you look at the 1 month charts, it's quite positive, Chandan. And if you look at from the March lows, also the stock has rallied by about 30% or so. Do you expect the trend to continue?
Yeah, so talking about Vari engineering, trend is positive. It has been making high top, high bottom, rallied well from 2550 to 3000. Supports are gradually inching upwards. 2850 could act as a major positional support to drive this rally towards 3200.
Okay, all right. Let's take another stock in focus. That is your Tata Chemicals, because we have a viewer query on it. Debuke is asking the views on how the Tata Chemical look like on the charts. If you look at from the 1 month perspective, the stock is not doing well, and from the 6 months perspective, the stock is in a very sliding trend at this point of time. Chandan, do you expect the negative trend to continue, and what is the target and resistance levels that you're watching out for?
So looking at Tata Chemical, it gave a false breakout above 880 marks. 2 days back, it headed towards 885 by surpassing the previous hurdle of 875. On weekly chart, it gave the breakout, but again got stuck in a range. However, the good part is the supports are intact lower, but momentum is missing. So getting the mixed sense of view in the counter, multiple supports are seen at 840 with hurdle at 900.
Okay, all right. Hurdle of a 900. Let's take another stock viewer query. Pooja Khanna is asking that she is holding Vodafone Idea at 10 rupees per share. What's the support level to average and to add more on the counter? We did see that Vodafone's AGR plea got dismissed by the Supreme Court as well, and the company is also indicating that without government support, it'll be difficult for them to sustain beyond FY26. But from a trading perspective and from the counter perspective, Chandan, what are your views on the counter?
So whatever the price, that is the support for the counter because historically the stock has been witnessing sustained selling pressure at every meaningful bounce. Lifetime low is 2 rupees 70 paisa from last almost 5 to 6 years. The stock has not surpassed above 1920 marks. In fact, on the monthly chart, the levels are shifting lower. Even surpassing 9 to 10 rupees is going to be tough for the counter, even after all the positive or the negative news. So I don't suggest to buy or average much. Better to be with a average name, which is margin of safety as well. But yes, if someone is looking for level, I think 5 to 9 could be the probable trading range for the counter.
Okay, all right. Let's take another viewer query. That is your Nitin Kapoor is asking the view on Trent at this point of time. Trent, if we look at yesterday, the stock reacted quite positively because we did have some news reports saying that the company will be added into Sensex and it is expected to replace Nestle and IndusInd Bank also. But that is something that we'll watch out for. But as a stock, what do you expect? What does the chart indicate for the counter, Chandan?
So looking at Trent, again, mixed set of cues is clearly visible. It has been making lower top, lower bottom from last 3-4 days, corrected from 56.40 to 53.30. But now it has come to the key support zone. So, but again, trend is in pressure. So I believe 5200 to 5500 is probable trading range for the counter with mixed bias as of now.
Okay, all right. 5200 as a support and 5500 as a resistance that we can watch out for trend. Let's move on to another viewer query. Dipankar is asking the views on Adani Power. He's holding 800 shares at 540 rupees and he's asking whether it will break the 580 mark. Right now the stock is trading with about 557 at this point and the stock is not exhibiting good trends from a 1 month perspective. But what do you expect, Chandan? Will it break the 580 mark that he's expecting?
So looking at Adani Power, 4 or 5 days back, it rallied well from 543 to 570. But after that, it witnessed corrective move in last 3 days, and now again finding support at 545. So 545 to 570 could be the probable trading range. But again, it got stuck in a range with multiple barrier on the weekly and the daily chart. So some sort of range bound bias could be there in the counter.
Okay, some range bound bias could be there on the counter. Let's take another viewer query. Anunay Ricky is asking the view on 361. He's bought the stock at 970 levels and he's seeing a bit of a profit at this point of time, Chandan. But the stock, if you look at from a 6 months perspective and of course from the January highs perspective, it is down about 22%. What do you expect? He's seeing a bit of a profit at this point of time. Should he continue hold or should he book his profit?
So again, disclaimer and disclosure will be there when I comment on any capital market related companies. We have seen support-based buying in most of the capital market theme, whether be it exchange, AMC, broking, or depository. Talking about the particular name, I believe 1060 is multiple barrier. Twice in last almost 20 weeks, it took hurdle at same zone. It has been consolidating in a range from last 5 days. But again, trend is now turning upwards. 975 to 1060 could be the trading setup for the counter.
Okay, all right. Let's take another viewer query at this point of time. Satya is asking the view on Dodla Dairies on how the counter looks like. If you look at from 6 months perspective, the stock is quite stuck in a range 1100 to 1200 rupees per share. And if you look at the Q4 was quite good because they have reported a 45% increase in Q4 net profit. And also, so that is also showing a good growth at this point of time. And revenue has also grown by about 15% on a year-on-year basis. But how does the stock look like on the counter? Can we expect any breakout of the consolidation zone that it has been in, Chandan?
So already the stock has rallied well from 1000 to almost 1240 marks and now has been consolidating. So not looking for breakout, but looking for buy on decline stance in the counter. It is supported 1130. With that support, it can head towards 1220.
Okay, all right. Let's take another viewer query. Well, Komal is asking the views on Bharat Electronics. Let's take a view on how the counter is doing with about 0.5% cut today. She's asking what is the possible target and the stop loss on the counter. We did say the management has given out a good revenue growth guidance for the rest of the financial year, which is FY26. But anything that you're watching out on a target levels, Chandan, for BEL?
Yeah, so Komal, we have positive on the BL. In fact, one of the strongest counter, which we are recommending from last couple of days. Stock is trading at its lifetime high territory. It has really done well in last 5 years, really well from 1920 rupees to all the way to 385. In fact, on the monthly chart, it really did well by more than 20% and formed a bullish pole and flex sort of pattern, which has bullish implication. In fact, on the daily and the weekly chart, the stock has been making higher tops, higher bottom. So those who are holding, we suggest to hold with support of 365. It has potential to rally towards 392 to 400 marks.
390 to 400 mark for Bharat Electronics. So that's something that the stock will watch out for. Let's take to another viewer query. That is your Hemant is asking the view on City Union Bank. City Union Bank, if you look at from March lows, the stock has done quite well. Q4 results are also quite optimistic. What does the near-term charts indicate, Chandan?
Yeah, so Hemant, CUB is one of the strongest name. We are quite bullish on the counter, trading at multiple months high. Just couple of weeks back, it gave the breakout of 188 marks, and after that, the supports are gradually shifting higher. In fact, 4 days back, it took support near 189, which earlier used to act as a support hurdle. So role reversal pattern is clearly visible. However, if market corrects, it might see some corrective move, but overall, it has potential to spike much higher beyond 210. So be with buy on decline stance, but be with bullish stance. 190 can be applied as a support for target of 205, 210.
Okay, All right, all right. Just one last question before we let you go, Chandan. Or what are your top picks at this hour?
Yeah, so first trade will be buy on BL. I think viewer Komal is asked about the same. So I'll suggest to buy on decline with support of 370 for an upside target towards 390 to 395. Apart from BL, I believe selective counter needs to be in radar. I can look at one name that is HL, but again, that is from defense, so I don't want to repeat two names. But let me tell you that we are positive. We are positive on most of the defense name. I can talk about GRSC again from defense name, but quite positive setup. I believe stock has potential to rally by 5 to 8% for intraday point of view. With support of 2500, it can head towards 2700 for the day. So BL, HL, GRSC, these are the name one need to keep in radar. One name I want to mention here is Steel Authority of India sale. Positive price pattern, it has given a consolidation breakout of last 22 weeks. So with support of 122, it can head towards 131 kind of levels.
Okay, all right. So defense theme, that is what you're betting big on, Chandan, at this point of time. But with that, we have to let you go, Chandan. Thank you so much for your time and answering our viewer queries so patiently.
Thank you so much.
All right, let's take a quick check of the markets before we move on to our next guest of the show. Well, the sell-off has intensified and the Sensex is down about 800 points, so to speak, and Nifty is also down below that 24,600 mark. So we have broken that 24,600 also, which we were sustaining in the past 2 days. If you look at the advanced decline ratio, declines definitely have upper hand at this point of time, and all of the sectors have plunged into the sea of red. Apart from the Nifty Media Index, which is eking out very slim gains at this point of time. India Wix, very notable jump with about 2% or so. Mid-cap and small-cap indices. Small caps, flat in the green at this point of time. However, mid-cap seeing a larger cut of about 0.5% or so. So yes, all in all, we are in a negative territory in the markets. And yes, yesterday's gain and rebound also that we saw, we have actually brushed and erased majority of it. But with that, let's move on to our next guest of the show. We have Mayuresh Joshi, Head of Equity Research, William O'Neill, joining us. Mayuresh, good morning. After the Moody's downgrade of US government, it is the Trump's tax bill which is spooking the bond markets, and the fallout is evident in our own markets today as well. Do you expect this to be just a temporary moment, or do you expect this to be a larger pain going ahead?
Morning, Lovisha. No, I think it might be a combination of a few factors at play. Obviously, I think the tax cut announcements that have happened, I think the estimates that are building up is that might add up to the deficit, which is already elevated as far as the US markets are concerned. And therefore, I think the spike in bond yields is a testimony in terms of these expectations that might get played out. At the same time, what probably happens with the tariffs itself over the next couple of months, by the time we hit the June end deadline, what kind of negotiations happen with China, with the Eurozone, with other countries as well, is going to be extremely critical in terms of defining what tariffs actually come through and what reciprocal tariffs actually come through and what kind of an impact that have on GDP growth. Let's also not forget that inflation is still remaining very sticky, whether that's in the US or even in the UK context. So global macros under a little bit of pump as we speak. And because of a combination of all these factors, I think the risk of trade that is probably expected to happen, which is an indication of what the yields are probably going up. You see the bond yields, the 30-year, 10-year in the US, in the UK, even in the Japanese context, are at elevated levels, which are indicating risk in terms of all these factors that are probably flagged off. And therefore, how these resolutions take place over the next few weeks on tariffs, in terms of expectations of how much tax cuts can probably come through and can impact the overall US debt numbers. And last but not least, in terms of whether inflation probably cools off. I think that might take a few weeks, a couple of months as well, to probably figure out whether we are going into a scenario where the markets are believing that there might be some pain as far as global macros are concerned. And therefore, I think volatility might continue on the global front, which might also get reflected as we are seeing it with Indian markets.
Okay, volatility is expected to continue. Mayuresh, also I want to understand about the Trump's 5% remittance tax, because now that US is the India's biggest remittance source, so with less dollar inflow, how is India's economy going to be impacted, and what does it mean for rupee going ahead as well?
No, I think the rupee has corrected against the dollar in a significant fashion, and so have other emerging currencies as well. So it's not just restricted to the rupee to a large extent on what probably happened over the last few months. Obviously, I think the remittance tax that he is probably proposing might create some elements of upheaval. But let's remember, I think a large part of our remittances flow largely coming from the Middle East within the remittance bucket that it comes through from. And therefore, I think it might not create a huge upheaval impact in terms of how the rupee might actually behave against the dollar. Also, I think the kind of announcements that RBI has probably done in terms of having some element of shoring up, in terms of defending it at any given point of time. I think RBI will come into the play as far as the forex markets are concerned. If they say there is excessive activity, obviously, I think they always say that it, it's it's driven by market conditions. But if need be, I think the regulators always there is the point I'm making. So I think the remittance tax is not going to be too much of an impact as far as the rupee dollar dynamics are concerned.
Okay. Mayuresh, you did mention that volatility is expected to continue. I want to understand from an earnings perspective, because earnings were not that great, but yes, of course, it was a signal that the upcoming quarters could be better. But I want to understand from a Nifty point of view, that do you believe that the upside is capped from here on? Because every time we did mount on that 25,000 mark, we see that we fizzle out that and the steam completely loses momentum. Do you believe that the upside is capped from here on?
So I think from a immediate short-term perspective, as I said in my opening remarks, over the next few weeks, the next couple of months, because of global macro developments and evolvements, the markets might be range-bound. But let's understand, Lovisha, I think from a macro and a micro perspective, crude prices have corrected quite significantly, which aids and abets India's trade and current account deficit. What we've probably seen in terms of the tax cuts that have been announced in the budget, consumption is going to get a huge kick as we head into the next few quarters. With better monsoons expected this time round, rural consumption is expected to make a good comeback. Government capex is accelerating in the last few weeks and expected to continue doing so over the next few months, the next financial year as well. And therefore, I think expectations of consumption-led growth, the expectations of government capex, and actually feed into private capex at some point of time coming back. And if that probably happens, our macros probably are stacked up, which are far, far better than most developing countries and most developed countries as well. Now, when it comes to corporate earnings on the micro side, the expectation largely is that because of a combination of all these factors put together again, the first quarter and the second quarter, you might actually see base building happening in this financial year. And again, I think an impetus in terms of all these factors put at play might actually mean that the second half corporate earnings might start rebounding in a significant fashion, which again is probably getting lagged on a global front as far as micro corporate earnings are concerned for a lot of companies globally, both in the developed and the emerging space. So I think the first and the second quarter is where I think the base building might happen. And in that sense, I think the second half might actually provide some element of earnings support for the market, which might again mean that Indian markets might actually do well compared to the rest of the globe. So over the next few weeks, because of global volatility, we might be range bound. But my own sense is that with expectations of earnings improving significantly in the second half, we might actually see an uptick happen in the Indian equity markets. And we might actually be, again, the best performing market, in my opinion. I'm just crystal gazing right now from an FY 26-27 perspective compared to the rest of the globe.
Okay. Mayuresh, what about from the flows perspective, given that we are seeing bond yields rising in the US and even Japanese bond yields have risen quite a bit. So do you expect from the flow picture that to take an impact?
It might, as I said, right, because of all these factors put together, in the next few weeks, the next couple of months, you might have some kind of an aberration in terms of flows. But ultimately, I think as things settle down, I think global investors will also take a pause and think which is the market which is probably providing us good macros, which is a market which is providing us good micros, which is a market which is expected to do well in terms of all the global uncertainty that we've got around us at this juncture. And then when you start placing India with a lot of commodity-driven markets in the emerging pack, it probably ticks all the check boxes that we're probably looking at. Outside the US market, I think we're probably looking at the developed markets as well. I think a large part of the markets are expected to go through some periodicity of pain in terms of valuations that these markets are trading at compared to their own averages, in expectations of growth dynamics, and in expectations of micro improvement, which might actually happen with a lag, which might happen on a base case scenario in a very positive manner as far as India is concerned. And therefore, as FIs or FPIs will start pausing over the next few weeks once things settle down on the global macro front, I think the Indian dynamics might start appearing far, far better. So in my own opinion, I think flows should come back significantly as we head into the second quarter of the second half of this financial year.
Okay, okay. From a sectoral perspective, anything that you're liking, where do you find the margin of safety at this point of time?
So domestic driven sectors is what we've always maintained, Lovisha, where the ratings, rankings, earnings pedigree probably looks a little bit more stable as we speak. And therefore, I think if you look into the next 4 quarters, how are earnings expected to stack up? I think a few domestic themes might actually continue doing well. So you've got alcohol beverages, where I think the numbers have been decent in Q4. Volume growth should continue, premiumization, expectation of state hikes, seeping into prices, input costs remaining extremely stable, creating operating leverage. So this is one space that can continue doing well. Agrochemicals is something that I've always liked over the last few couple of quarters. And my own sense with better monsoons, expectation of better farm gate prices, input costs again remaining stable, working capital cycle remaining far more robust as we speak. And because of better monsoons, expectations of decent operating leverage being played out can actually be a case scenario to be done. Hospitals within the healthcare space is something that can also continue doing well. They've adopted an asset-light model. They're expanding through JDAs. They're expanding into tier 2, tier 3 cities. A large part of their bed expansions is still continuing, but in a very calibrated fashion, in an asset-light mode, which does not increase leverage on their balance sheets. And therefore, the numbers which can get reported for this space can be relatively stable compared to the rest of the pack. Again, with less leverage being played out due to the asset-light model that they're probably adopting, the expectation is again that the return ratios should also remain strong, which probably makes us believe that part of these domestic-oriented sectors might do well. Again, let's not forget consumer discretionary, because at some point of time, because of tax cuts, urban consumption, which was lagging, expected to come back because of monsoons, rural consumption expected to come back. So a few of these consumer discretionary pockets might actually start making a comeback in Q1, Q2. So they might be a combination of textile players, footwear companies, a little bit of an apparel mix as well. And a few infrastructure plays as well. This government capex is going to be huge this time round. And if private capex does come back, I think the ordering activity might be significant. So I think a few of these domestic themes, if you place yourself over the next 4 to 8 quarters, might actually start.
Okay. Mayuresh, but what about, you did mention about the domestic oriented plays. I want to understand from export oriented plays. Do you believe that investors should remain on the sidelines for that, for the time being, given that we're seeing some concerns on the US economic front as well? And or what do you think? Do you believe that the correction is overdone, or do you believe that there is more downside incoming?
So I think to a large extent, again, if you probably look at what the policy making might be globally, if somebody is holding on to qualitative stocks, say within IT or pharma, which remain one of our biggest export-oriented sectors, I think even within IT, a few of the mid-cap IT companies have given decent numbers. The commentaries have been decent as well. And therefore, a few of these qualitative mid-cap IT stocks, if somebody is holding, can continue holding. Even within pharma, I think it's very difficult for Trump to adopt policies which says that you start making in the US. It's a huge time and cost effort. And I think no companies are probably adept to that at this juncture, which will start making over the next few months. So the dependence in terms of Indian pharma, which are producing quality stuff under FDA regulations and audits, and they're having a huge specialty pipeline. So leadership pharma stocks, which are having a huge FDA, ANDA pipeline of specialty drugs, where the stage 2, stage 3 trials are almost at the verge of completion, might actually have the competitive advantage compared to its peers as well. So within the export-oriented sectors, if somebody is holding on to qualitative stocks catering to both these sectors, they might very well hold on.
Okay. All right, with that, we have to let you go, Mayuresh, but thank you so much for your time and we hope that we connect with you soon.
Sure. Thanks. Always a pleasure.
Thanks. All right, let's take a quick check of the markets at this point. We are in the negative territory, like I was mentioning earlier, and we're still standing at the same downtick level. Sensex down about 800 points, and Nifty is also below that 24,600 mark. All of the sectors are not doing well except the Nifty Media Index, which is seeking out a very slim point of 0.2% gain. Other than that, mid-cap and small-cap indices are also exhibiting a mixed trend. Small caps outperforming the mid-caps with about a flat, but with a positive bias. On the other hand, mid-caps are doing quite worse with about 0.3% cut. IndusInd Bank, after being one of the top losers on the Nifty 50, that has rebounded and the share is up about 1% or so at this point of time. Yesterday we did see that the management has indicated that they plan to appoint the new CEO and they plan to give out the name of the new CEO by June end to the RBI. So we'll watch out on how the management development and the leadership transition takes place on the counter. But yes, IndusInd Bank, after 4% loss, it's taken a little bit of a rebound and it's one of the top gainers on the Nifty 50. Other than that, Adani Ports, Adani Enterprises doing well. On the other hand, on the top losers, we can see some of the tech stocks which have taken a beating due to some fiscal deficit concerns in the US and the proposed new tax cut bill. So we can see HCL Tech Mahindra seeing a cut of about 2% or so at this point of time. But with that, we have come to an end of this edition of Opening Bell. Don't forget to tune in at 3:30 for closing, and we will be discussing about how the market is developed and what the stocks were in focus. Until then, signing off.